Rabobank Senior Animal Proteins Analyst Angus Gidley-Baird. Thanks for joining us on Flow today.
Not a problem, Rikki. Great to be here.
Now, you've put out a report here, your quarterly report on beef, some really interesting topics, but let's get straight to the exciting news with the Eastern Young Cattle Indicator. It's actually up to 1,031 cents as of the time we've gone to air.
Yeah, it's quite phenomenal, really. I'm one of those analysts that earlier in the year I was expecting it to start to come down, and I've basically been looking at it through the course of the year going in the opposite direction. So it is amazing, really a reflection of the limited supply of cattle that we've got and the good seasons that are out there at the moment, and this strength in demand, not only from the producers looking to restock, but also there's some reasonable prices through to the retail level and that global market as well that are probably helping and making sure that the other operators, the feedlotters and the processors in the supply chain are also keen to try and get their hands on livestock numbers.
Well, we're with you on eating a bit of humble pie about price predictions. On the air, we had a bit of a bet about when it might actually hit 1,000. I said Christmas, and my fellow host Wayne Phillips said it would be by AFL Grand Final day, but it got there about 3 months earlier than that.
Yeah, it has been phenomenal, and honestly, all our modelling is saying it is well above where it should be at the moment, purely based on the fact that we've got this phenomenal demand locally, with the producers out competing each other to try and get their hands on whatever cattle they can. But it's great while it's up. I suppose we've got to be realistic though. It is placing us in the upper brackets and the upper echelons of global cattle prices, which does make it difficult to compete on that global market. Also, domestically, we've seen retail prices jump, large amounts in the last 12 months. I'm top of my head, I think it was something like 13.5% in the last 12 months. So it does place pressure on our end consumer markets, and we have to expect that these prices will ease at some point in the future.
And good for the farmers at the moment that are selling when it comes to those prices. But are there factors going on now with the lockdowns, but also with the meat processors? How is that playing into the market? I mean, there was a hack on meat processors a while ago, but now with lockdowns, is that feeding in, you think, into the prices?
Well, it is in a sense in that, every operator in the supply chain, just like the farmers are out there competing to try and get cattle on the grass that they've got so that they can utilise that grass, the feedlot operators, the processors, everyone is looking to make sure they try and retain throughput in their system to get the most out of the capital that they've got and the investment that they've got in that capital. So making sure those feed yards are full, making sure those chains in those abattoirs continue to operate. The other challenge is as well, if you start to shut down any of those operations and lay off staff, the difficulties with attracting staff at the moment means that your ability to rehire those at a later date is very uncertain. So sometimes the short-term cost to maintain that volume coming through and pay the high prices offsets the longer-term cost of if you actually lose that labour force and aren't able to get it back on board. So all those pressures are adding to the supply chain at the moment.
And you mentioned domestic prices earlier. This was ostensibly the reason, I understand, why Argentina smacked an export ban or a limit on how much they'd send out of the country. You've got a view that might feed into the Australian market at all?
Oh, look, yes, in the global market, it does have an impact. Argentina was the fifth largest exporter in the world. They were supplying 22% of China's beef imports last year. Now, the scenarios we've worked out, we believe that, potentially at the end of this month, when the government's going to have make another announcement, potentially we might see Argentinian exports to China restart again. So it's not going to have a major impact. We potentially might see, total Argentinian exports this year drop by something in the order of 9.5%. So not a big impact, but still, it does just show how tenuous the market is in terms of that overall global demand for beef out there and who's supplying those different markets.
Yeah, well, it's good to catch up with you about it. Great to be speaking with you, and who knows, we might be talking about 1,100 cents before Christmas.
Oh, look, I don't want to say we can't get there, Rikki, but at the moment it is a very inflated price, and I think we've got to be realistically and say, look, even if it came down to 800 cents or 700 cents. That is still a phenomenal price. You don't have to go back into history, even 2019, and we were talking about 500 cents for the EYCI. So, yeah, we're phenomenal prices at the moment, but I think we've also got to be realistic.
Yep, Angus Gidley-Baird, thanks for joining us again from Rabobank. Much appreciated.
No problem, Rikki. Great to speak.